This is what you're doing this Thursday pre-market.
And this is what you are doing this Thursday at close.
I'm not leaving. I'm not leaving. I'm not fucking leaving!
Thursday's massive bounce is likely because the short covering right at open and then everyone and their grandmother hopping on once the rally started. But let me tell you, I was shitting bricks for my McDonald's and JPM positions at pre-market.
That's a convenience explanation for the bounce, don't you think? If you pay attention to the pre-market levels, obviously, hindsight is always 20/20, but you can see that Nasdaq hit near critical level.
Oh, really? Let's take a look at Nasdaq 100 futures on Thursday morning. It went to 13,028, which is about a 20% pullback from all-time high, just above 20 actually, which is the most critical level between bull and bear.
Yup, even though the S&P is not quite there, hitting 4,103 in pre-market future. But since Nasdaq 100 got all the heavy hitters in the S&P, plus if you look at the volumes for all those heavy hitters, Thursday is enough to show that we have reached short-term bottom. In another word, if you bought near the low on Thursday, that position is safe for now.
Friday's continuation again shows that all the Russia-Ukraine fear is just tactics to scare investors into giving up their holdings. Soon as indices hit a critical level, it doesn't matter if the war just started. Everything can be interpreted however Wall Street wants.
Obviously, we don't want anyone to die and hope that no one you know live around that area.
Absolutely. So today, we will be talking about the million-dollar question. Is it time to buy the dip or add the dip if you have already bought?
And we will also talk about Block and Baba's earnings.
Before we start, I know we both cut some losing positions in Roblox Thursday pre-market and switched it to Nvidia. Sucks that Roblox bounced more. We also got some TSM calls for May. Unfortunately, we got it on Wednesday, so we're still down on that. I'm still holding McDonald's and JPM from last update. Still down from the dip, but I'm not too worried.
We believe that Nvidia will bounce harder and dip lighter than Roblox overall, and is actually profitable, whereas Roblox is not yet. So it's not that we knew it was the bottom for Nvidia and bought the dip. It was definitely a defensive strategy for us.
So is it time to buy the dip?
Let's look at opinions from three big banks. First, Morgan Stanley notorious bear Mike Wilson said that the market has priced in a lot of bad news out there, and with the de-escalation, we could see a 5% rally.
Wow, so that's since February 22nd. He was 1 day early, but the market bounced over 5% since Thursday until now. And Wells Fargo said it's not yet time to buy the dip, since there is too much uncertainty in the market right now. But don't sell your stocks either, just hold. And also recommends tech, financials, and industrials, and says don't buy utilities and consumer staples.
Aren't you looking at Home Depot?
Yeah, I like Home Depot at 300, which was right about there Thursday morning, and I'm going to ignore Morgan Stanley. But sucks that I didn't pull the trigger. If there's a pullback near there, I'll be grabbing Home Depot.
Looking at our third bank, Citi said buy the dip. And looking at their global bear market checklist, apparently out of 18 potential red flags, only 7 are currently waving, which is significantly lower than right before 2000's dot-com bubble and 2007's financial crisis.
Is that bear market checklist reliable though?
Let's see, according to this chart, it's pretty accurate for 2000 and 2007 crash, but not so much for 2020. But to be fair, there was nothing like COVID crash. Even Buffett said he never seen anything like this before.
I guess that makes sense. I think this is not a buy yet personally. It would be a buy when the market broke the downtrend and retest the trend. Or when certain profitable companies such as you mentioned slightly earlier, Home Depot, are at a very reasonable price level, then I will pull the trigger. What about you?
I agree with you. If I got a chance on this dip, I will pick up a lot of financial just because that we are expecting a lot of rate hikes for this year. And let's take a look at Block. Block was up 26% the next day after reporting earnings on Thursday. The total revenue hit 4.08 billion compared to expectation of 4.04 billion, and the quarterly gross profit jumped 47 to 1.18 billion.
Their terminals and software products for businesses to process payments generated gross profit of 657 million, up 54% year over year, while its Cash App, which lets individuals send payments including Bitcoin, grew gross profit 37% to 518 million.
Management team gave an optimistic outlook for the year and believe Cash App's year-over-year gross profit growth rate will improve in the second half of the year compared to the first half.
And Square sellers can offer buy now, pay later through Afterpay now that the acquisition is complete.
They also launched Square in Spain in Q4. Did you also hear that Apple will soon roll out a new feature that will let small businesses accept contactless payments from customers using their iPhones?
Yep, Apple is going to turn the phone into its own payment processing terminal. They are definitely a major competitor to rival Square. I mean, more than 50% of the US population uses an iPhone anyway.
Block stock prices are down about 45% since 2022, and just since one day, it recovered half.
I was hoping to get some positions around 75, but I guess they took off without me. Oh, and I donated some money out of spite into Square Puts this Friday. Probably gonna be gone, but because I don't think this ER justified 25% bounce. I know, it's pulling with the market, but still.
Yep, let's also go over some Alibaba earnings this week.
Well, the stock price dropped 7% after earnings posted on Wednesday, and we have the slowest growth quarter year over year reported since Baba's IPO back in 2014.
Well, their e-commerce and cloud computing are in line with expectation, with revenue falling slightly short of what was anticipated as profit, and earnings per share beats estimates.
The stock is down almost 55% this year. Come on, we're talking about Baba here. What are they doing wrong?
Well, besides China's stock have been hammered this past year because of crackdowns by Chinese government regulator. They are also facing some intensifying competitions from ByteDance and Kuaishou.
Live streaming e-commerce platforms are taking a good chunk of market share from Alibaba. Consumers in China are slowly accustomed to this new online experience, and as on the merchant side, sellers have allocated most of their advertising budgets away from Alibaba.
That explains why revenue in Q4 fell short of estimates at 38.9 billion. The growth is only up 9.7% year over year this quarter, and that was well below its historical growth rate, which has averaged around 40% since it went public in 2014.
The company also took a 3.9 billion goodwill impairment charge in its digital media and entertainment segment. In response to government orders to divest some of its media assets, with that charge, Baba's operating income fell by 34% to 5.1 billion for the quarter. On a per share basis, the company slightly beat expectation with 2.65 per share, but still down 23% year over year.
So what I think is that the Chinese government's bullshit has fundamentally changed the company, and is definitely restraining its growth and hurting the company's profits. It also added a lot of uncertainty to Alibaba's future.
It looked like that's already reflected in the stock price, which is down 65% from its all-time high. The company has begun a share repurchase program and bought back 1.4 billion in stocks in the most recent quarter.
The company is valued at 290 billion right now. If stock drops another 40 to 50%, they might as well go private. Do you know why China loves Huawei and provides them with so much support? Because they are a private company. Private companies have full control of the company operation and are able to keep all nations' credentials.
Yep, so the stock is unlikely to make a comeback until the regulatory environment improves. But I think adding here around 100 is kind of a bargain.
I'm going to be a little bit more patient since I'm pretty sure it's going to be delisted once the 3 years window closed starting last year. Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.